U.S. President Donald Trump says the attack against Iran could last weeks. So how is oil responding? We saw some of the numbers, but let's bring Lyle Stein in, president of Forvest Global Wealth Management, to chat more about this. Lyle, thanks very much for joining us. Is this what we'd expect with oil? Is it in the ballpark of a reaction to this?
Oh, yeah. I mean, oil was trading at the $60 level, Roger. And then I think the market kind of got a whiff that there could be some geopolitical dislocation. And it slowly started to drift up. I think, mid-70s makes sense. Whether it's Brent, which is obviously trades higher than West Texas, or West Texas, I think this makes sense. And now it's just a question of what goes on over the next week or so. Again, you mentioned the inventories and blocking of storage, and what does that really mean, as the Straits of Hormuz probably won't be opened. So we just have to wait and see. Is it a 2-week war, or will it extend into something else?
Are there a couple of realistic scenarios we could look at for this, or is it really just up in the air right now?
To try to make a bet on this is way beyond my expertise. I think, the notion was, and again, what we looked at oil at $60 oil, there wasn't as much an incentive for production to come on stream as it might otherwise be. Now with oil at 70, and obviously you've got Iran maybe coming off, or some of that north of the Strait of Hormuz oil coming off, it could go higher. But I mean, there's a lot of oil in the world. It's just a question of getting it to the markets, and what are the politics involved in getting it to the market. Is it Russian oil? Is it Iranian oil? Is it Venezuelan oil? There's a lot of oil. It's just we've had tight markets because of all the politics.
And if this threat drags on and the closure continues, where will people look? I mean, what other options are there? Would they ease up on Russia? Is there any possibility of that? Can Canada benefit from this?
Well, if we had pipeline capacity, we'd be in a much better position. The good news is we do have the TMX taking our oil to port. I think that's a really good question. Will Russian oil be allowed to go? I don't think so. Will people go into Venezuela and start pumping? Well, that takes time and capital. So, the OPEC made an announcement that we will increase production. Mm-hmm. That's good, but they still have to get it to port, and there are pipelines. But the Strait of Hormuz, I think, ships something like 20% of cross-border oil.
And I mean, I guess longer term, we shouldn't see any impact yet on prices, but there is if this drags on, we'll see prices go up. Then that inflation becomes a concern, doesn't it?
Well, yeah, exactly. Financial people love to talk about inflation ex food and energy, but the real person out there is hurting. The real person out there knows what the price of oil is, and more importantly, the price of gasoline. And they benefited as oil stayed in the 60s for the last few months. As prices now go up, the gas pump gets more expensive, and your ability to stretch your budget is hurt because incomes aren't going up. That's the other side of the economy. This could cause a growth slowdown. And the growth slowdown will unfortunately hit workers and workers' pocketbooks.
And going a little beyond, let's talk a little bit about U.S. yields. You're seeing them crack 4%?
Well, it's interesting. That to us is the barrier. Will yields go below 4% on the U.S. Treasury, which is the benchmark around you really want to basically make all your investment decisions? They had held above 4%. They had held above 4% just late last week. They cracked 4%, but they're up again today, over 4%. And, the interesting thing is, as you mentioned, the U.S. dollar is a safe haven, but the Treasury bond is also a safe haven, and it's not behaving in a safe haven manner. Part of that, I think, is because governments are borrowing so much, and the cost of money, the real cost of interest, remains high, and it's going higher.
So does that mean then that gold remains a safe haven, or the dollar? Will people put it into the dollar?
Well, today is unusual. Gold is up and the U.S. dollar is up. Typically, they run the other direction. When one goes up, the other goes down. But gold is the ultimate safe haven, and I think investors are increasingly becoming aware that gold is a place to have your assets. Simply like central banks are buying gold. And so as a diversifier, it's worked really, really well. And frankly, as money flows between sectors, between asset classes, gold is getting the benefit of that. The amount of gold in the world relative to the amount of equities and debt is still quite small. And so you're seeing a bit of a rotation into gold as a safe haven asset.
All right, and then how are the markets going to? I mean, we're seeing in the futures right now. Over the next few days, how do you see the markets responding to everything that's unfolding?
Well, I wish I could be so good on that one, Roger. I think we're seeing. I think we're going to continue to see this rotation. The rotation out of the great stocks of the last 3 years were the AI plays, and they got to be just a really, really large component of portfolios that people hold. And so as money is moving out of that, it's going elsewhere. It's going into hard assets. It's going into energy. It's going into gold and gold stocks. And I think that rotation continues. Through this piece, the S&P 500 really hasn't fallen much. It's only off, maybe 4 or 5% from the top. But individual stocks are going up and down 10, 20%. We saw software get destroyed over the last few weeks. We've seen the AI stocks come under significant pressure. Money is rotating out of those names into more traditionally safe names.
And I'm not sure, I don't think I missed pipelines is one of them. And you're liking that right now, aren't you?
Yeah, pipelines are a great place to be. They're hard assets and they pay, on average, I think we've got pretty much every pipeline in client portfolios here. And the average yield is somewhere between 4 and 5% in total, which is better than what you get on a bond. And they can grow those dividends. And they're relatively immune from all the geopolitical concerns. In fact, one might say they could benefit as they move energy to markets that need it.
Okay, we'll wrap it up there, Lyle, but thanks very much for joining us.
Hey, have a good week.
Cheers, you too. Lyle Stein is president of Forvest Global Wealth Management.